what a day to start the week with some big news and some unexpected news than what everyone else was thinking based on the AFR Street Talk articles yesterday. Genesis, GMD have come back with an improved bid for St Barbara's Leonora assets. Bit of a work of class here, and we're going to get right into it. It's very, very impressive how all this is unfolded. JD, Trav, how are we, lads?
Matty, how are we?
We've been deep diving into, ASX listing rules. Sorry, I have. But we're right into it today. I'm looking forward to covering this. JD, Trav, let's go over the new deal.
How's your weekend, mate?
It was good, mate. I've been waiting for this the whole time. Been thinking about it. I don't even want to chit chat today, JD. Let's just get right into it.
Let's do it.
Genesis have come back with a revised offer, an improved offer of. There's an extra 5 million shares up front, so that those 5 million shares are valued at 6.275 million on today's Genesis price. And now the performance rights that we quoted in our previous episodes, the $60 million contingent value, which was based on 52,173,913 shares, but based on today's price, that is worth $65.5 million. Those performance rights were contingent on Tower Hill reaching first production. Now there is a deadline that those performance rights, they still exist, but if St Barbara shareholders sign off on this revised Genesis deal before June 30, those performance rights are converted into fully paid ordinary Genesis shares. Okay, now this is the big... We can get into what we see in this announcement, but I see this as the biggest part of the announcement and a bit of a masterclass from Mr. Finlayson, because this item right here means that if St Barbara now choose to engage with Silver Lake and potentially delay this deal going through, that those performance rights will not be converted into fully paid shares.
Yeah, and we've also got the key detail weaved into the 4-page announcement today that the St Barbara board are sticking with Genesis, and they've deemed that the revised Silver Lake proposal that we spoke about last Thursday doesn't meet their fiduciary out exception.
Yeah, right. Trav, first take, mate. First take. What's standing out to you the most with this? We've got a lot to get into. Let's get right into it.
Yeah, I mean, I think this is when I look at this, I just think of the strategy, right? Because, we're all expecting St Barbara board to meet yesterday, according to the AFR, and we're thinking the two options are grant due diligence to Silver Lake or not grant due diligence to Silver Lake and just choose the existing Genesis bid as the superior offer still. And what's actually happened here is a third option, which is Genesis put in a revised offer, and that one gets sort of deemed as so superior that there is no need to grant due diligence to Silver Lake at all. So I just think here's an option that we never hypothesized about, that sort of come about and sort of reshaped our thinking, and we sort of think this is actually pretty clever. And
just remember our comments on the discount rate applied to that contingent Tower Hill payment on first oil, which was 60 million, and we said, look, you'd take 20 million off that as potentially a 3 year. 3 years you'd have to wait for that payment, so that might only be worth 48 million in today's terms. But now the big thing is that will be on today's price worth $65 million upfront to St Barbara shareholders upon completion, if signed off by June 30.
Yeah, and we'll get more into that in the detail. Just with a quick take, it's probably worth mentioning what the share prices have done today. So Silver Lake is up roughly 5%, Genesis marginally down about 3% when I last checked, and St Barbara down as well. So that sort of gives you the indication, just looking at what the Silver Lake price had done over the past 2 weeks from when they first announced that they were interested in the Leonora assets. You can sort of see that the market hasn't been too receptive to the idea of them spending close to $700 million on these assets. And yeah, those shareholders at Silver Lake are now happy that it looks like Genesis are going to be the ones winning out.
And just recently, I think it was about an hour ago before this recording, Silver Lake are actually up 7.8%.
There you go.
There's a big kick based on
Just emphasises that point.
just
really.
looking at the investors are possibly pricing in the fact that they might walk away from this. But we can go through those scenarios as well. Now, look, as we mentioned before, to be clear, we're not in cahoots with anyone in this. This is purely our research on the information we've been given. We haven't had the opportunity to interview Dan, Ral or Luke Tonkin on this. Look, we're more than happy to accommodate any of them that would like to come on. So, look, these are our takes, and a lot of our takes last week were based on the Silver Lake information that was put out, as that was the major information that was put out. Now we've got this Genesis piece today, which as Trav mentioned, we were expecting just St. Barbara to come out and say we're not letting Silver Lake in the door. That's what the AFR was really highlighting, but this has really come out of left field and got everything happening. So
I'm still in favour of the panel, Matty. I think that is the future of M&A. We bring the three of them on, and it's a free for all.
Well, it's hard enough to get an MD to lock into a time. Imagine trying to get three of them with a sync calendar. So
I think they could make it work for this one.
Right, Trav, do you want to go into the detail of the changing of the contingent payment?
Yeah, mate. So, I think this is interesting, right? Our probably biggest critique of the St. Barbara's initial view of the Silver Lake offer was that it certainly did seem like value, like superior value, right? And that was emphasised by Silver Lake. Now, I think what they've done here is they've come to the Genesis have come to the party on value, and now value really does look very similar to Silver Lake's proposal, to the point where you absolutely, like, it is a defensible position to stand behind the conditionality element, because value looks really similar. So they've effectively just eliminated the contingent part, like you mentioned, as long as it's approved pre 30 June, and all of a sudden that's upfront consideration. And if you are if you're a St. Barbara shareholder, all of a sudden it looks like the read through is that you're going to get those extra Genesis shares distributed to you early, as opposed to them actually just being distributed to the company St. Barbara in 3 years' time, which, like, as a shareholder of St. Barbara, makes a massive difference. You would much rather that than wait for the company to get given them in 3 years' time, and then there's no real certainty that the company is even going to give them to you. So, and who knows if you would even be holding onto the St. Barbara shares for all that time to be entitled to the Genesis ones in the future. So I just think it's a much better outcome for a St. Barbara shareholder. And
it's also pretty smart what the sort of Genesis unit has done. This deal has obviously been in the works for a long time, and they, I'm sure, didn't want to have to do any sort of massive restructuring. Now, this looks like the cleanest way they could restructure the deal without having to, go back with a completely revised thing. I'm sure they've run this by the guys Oz Super, who are taking a large chunk, and RCF as well. But just bringing that contingent forward seems the best way to sort of improve that deal without, massively changing it.
They've improved value without having to tap new equity.
Yeah.
Yep. Yeah, that's a really important point.
There is that extra 5 million shares that takes them up to the 19.9% threshold. Do you think that this was the ace up the sleeve for a while, if things did get to this stage that it has, that this was always a potential to sweeten the deal from Ral's end?
I think so, because like think about it from Genesis's side. The alternative to this is risking that the door gets open to Silver Lake, it gets deemed a superior bid, and then you have to match it. So they're kind of just preempting the match by and preempting the delay that sort of happens in that entire process by kind of coming to the party earlier and knocking down that before it even starts.
Yeah, and we sort of predicted that the pressure on the St. Barbara board would sort of mount over what's now been the past couple weeks, and like Trav touched on before, this is a good way for them to save face and get a better deal to show to their shareholders.
Totally. It's a much more defensible position than just coming out with a flat no.
But I don't think it wouldn't have had as much of impact if there wasn't that 30th of June deadline that they put. As you said, a contingent on the contingent, the contingent payment has now been made contingent again based on this being approved. So
that 30th of June date has been the elephant in the room for a while now. Everyone knows something.
Nothing was ever contingent on it. it was a guideline, but now if it's not done,
Yeah, this is clever deal protection baked into the revised terms by the Genesis side. Yeah, absolutely.
so to tie that in with Genesis's strategy, well, probably not the overarching strategy of the project, but they are saying if you now let Silver Lake in the door, you will not get these. So I think it's really putting the pressure on that they don't engage with Silver Lake, and we'll go through the scenarios. Will Silver Lake come back with another bid?
Yeah, and you've got that no talk, no shop sort of clause that's been in the original agreement between Genesis and St. Barbara, and that was just underlined again in the announcement today.
They've included it in the appendix. Did you see that?
Yeah.
Very interesting. We no longer have to hypothesize about them. They've included it for us.
Right, strategy from the St. Barbara board angle. Okay, the higher proposal from Genesis, in contrast to having to say a flat no to engaging with Silver Lake, trying to sell that to their shareholders to say that we are going to say no, we're going to use Genesis even though it's on paper a higher consideration, seems to alleviate those concerns now.
Yeah, I think one of our biggest critiques when we first started talking about this a couple of weeks ago was that the St. Barbara board came out and said that they deem it to be a 9% better proposal by Silver Lake. And then we sort of put the lens on that if you look at what their share price has done over the past couple of years, why aren't they, jumping over the table and grabbing the guy's shirt to rip off that, 9% extra for their shareholders? And now that Genesis have come in, offered a better deal, it's much more defensible, like we sort of said before, so they can sell that to their shareholders that they've done the right thing, and the deal becomes much more contingent on those conditionality and timing clauses as opposed to the actual dollar value of the deal.
Totally. And if you sort of preempt what Silver Lake might have done next if St. Barbara just came out with a flat no, what might they have done next? Well, they might have reduced some of the conditionality associated with their first deal to really make the value point even more prominent. So they could have, had it funded by equity or reduce some of the other conditions to make it even more similar. So it really just becomes an argument on value. And by Genesis sort of coming out now with this revised proposal, it actually just sort of, minimises that possibility because now the value is actually very comparable.
And what Silver Lake share price has done from when they first announced the deal, I think it's definitely been a detriment to their success in everything, because that script component, the on paper value initially was above, the headline number was above 700 million, but due to their share price going down so much since that, you're putting the deals side by side now are pretty essentially on par in value.
And that's really the market voting on what they thought of the Silver Lake deal, isn't it?
Yeah.
Yeah, they're probably the market is probably a bit dubious of price for an underperforming asset. And maybe it does speak to some of the the St. Barbara talking points about demonstrating plans for the asset, what's intended there, albeit there's no clear operational synergies.
So Genesis are also putting in a $25 million deposit for that'll go into escrow. What's your read on this thing?
Yeah, it's a really interesting one. We saw in the Silver Lake proposal as well that they'd arranged for a $25 million working capital facility. And I think the key takeaway is obviously that St. Barbara are in a pretty dire cash position. And just sort of speculating on what that cash could be used for, given what you said, Maddie, that it's escrowed, you could speculate that St. Barbara, who need the cash to back these environmental bonds with their Canadian asset Atlantic, it might be used for that and then free up cash in turn for them to use on their operations and so on. Yeah,
I think that's a potential read there. Yeah.
Right, let's go over the production targets. So now I've been asked this by an avid listener, a couple actually, that can they actually quote these production targets based on the fact that they don't own these reserves yet, there's inferred components. How does it all work? So Genesis have quoted that their production growth to a sustainable 300,000 ounces per annum, for the pro forma. Then the footnote of that sends you to the 17th of April announcement showing the resources and reserves of St. Barbara. Then you've got Silver Lake then quoting last week that they will be a genuine mid-tier gold producer with immediate gold production of 400,000 ounces per annum after this, post the transaction. So there's ASX listing rules that determine what needs to be disclosed for this to put these production targets out. So so there's 5.16 and 5.18. So 5.18 relates to operating mines, okay, which I assume Silver Lake were trying to go under 5.18, and then 5.16 is for like mineral resources and ore reserves, 2 or more mining projects which are together material. So like not actual all operating mines. So it says that, and if you're on YouTube, you'll be able to follow some perfectly highlighted documents straight out of the listing rules to show you this. So it says here, all material assumptions on which the production target is based have to be provided. So if you look at what Genesis have provided, so there was the Hoover House initial proposal, then the updated one with the new deal. So if you see here, it's clearly shown by Genesis that their plan was that 700,000 to 800,000 tonne was coming out of Gwalia, 600,000 to 700,000 tonne was coming out of Ulysses, and that's what's going to fill up the Leonora mill. So that was their plan. They've put out their reserves and resources for combined of Gwalia, the Leonora projects and their Ulysses, though that 17th of April announcement, which was the detailed resources and reserves put out by St Barbara on Genesis's platform, it appears that the ASX have then asked that they needed to put that out because what they provided initially, I guess, wasn't enough. It needed to be the detailed ore reserves and resources for Leonora for this to work and to satisfy that item of 5.16. And then you go down to the next one. It just needs to show the relevant proportions of your probable ore reserves, proved ore reserves, and your inferred, indicated and measured resources. So that's what that 17th of April document satisfies. And if you keep on going through, got plenty of legal stuff this. So if a proportion of the production target is based on inferred mineral resources, which is what's contained at Ulysses, a cautionary statement proximate to and with equal prominence has to be stated. So you'll see that in the footnotes of the Genesis announcement, the most recent one, there is this footnote here, but I'm not sure if equal prominence means that needs to be in big writing or something, but it's that cautionary statement is in there. So the footnote is there is a low level of geological confidence associated with inferred mineral resources, and there's no certainty that further exploration work will result in the determination of indicated mineral resources or that the production target itself will be realised. So that's what you have to put if there's that inferred component.
Yeah, I think it's worth, wondering what the ASX does here and how they go about it. And I think a good analogy would be to sort of refereeing a footy game or something like that. It's not always going to be the exact same. They try and keep it consistent, but it's not going to be consistent across every single ASX announcement you see. It's not always going to be the exact same. They've just got these rules they try and stick to.
Yeah, and I think the fact that Genesis have put out on the 17th of April the detailed St Barbara ore reserves and resources, and combined with the actual plan. So now for all this to work, the DD side of things for both parties. So the Genesis have come up with, they've got their integrated model of this consolidated Leonora operation. So they've signed off on that. The DD's been done between St Barbara and Genesis. It's in the final stages of the deal being done before Silver Lake come in. So with that both being signed off by both parties, so Barbs have done their DD on Ulysses. They can quote an ounce target with all that. And it sounds like that 17th of April resource reserve statement was the final piece of that. Though Silver Lake's claim to be able to get to 400,000 ounces, I guess that's the bit of the hazy bit where they're trying to go under 5.18, which you can see on the video.
So this is Silver Lake saying that they'll be an immediate mid-tier gold producer of 400,000 ounces, which is a forward-looking statement. So what your question is, how do they stand behind that? Is that right?
Exactly, because they don't have to. They are using the fact that the Leonora asset that they are buying is an operating mine, which puts them under 5.18. And as long as you don't, as you see at the bottom there, the indicated mineral resources are not the determining factor in the project viability. So it's saying they don't need to follow 5.16 to 5.17. So it's just, I guess the hazy bit saying, are they able to provide this based on the fact they have not done DD on St Barbara, St Barbara haven't done DD on them, to say the pro forma production is going to be 400,000 ounces. So I hope that answers the question to people that raised it.
Yeah, we spoke with Mr. Spector, who is
Our new anonymous lawyer,
an experienced M&A and ASX listing rules lawyer who knows a thing or two on the matter, and his sort of take was that Silver Lake could say that statement, the 400,000 ounce, pro forma mid-tier gold producer forward-looking statement, given the reasonableness of that statement, which can just come down to St Barbara's publicly disclosed mineral resource and reserve statement and also historic production levels, even though they haven't done DD.
Yeah, and
keep in mind they won't be including, Ulysses ore in that number. It's just St Barbara's Gwalia.
It's purely what Silver Lake are currently producing plus what is anticipated from Leonora. So anyway, bit hazy, but as I said, there's plenty of grey areas on the ASX. Now, any other, I guess, announcement bombs we want to talk about hidden in the print within today's Genesis announcement?
Well, we've had a few suspicions about how far along were they with developing Ulysses, essentially. So they've come out and announced it in Genesis announcement today. So development is well underway there. Underground mining from the September quarter, Admiral open pit mining from the September quarter as well, and the maiden reserve coming out in June. So I guess the first thing that springs to my mind is, how have they gone about developing this without having released a reserve to market? And how I'd sort of think through that would be that they're waiting on the transaction to wrap up before coming out with the reserve, because it's just so dependent on that transaction. What do you guys think?
Yeah, probably right. The mineable shapes depend on the economics, which are influenced by the ability to blend the ore.
Absolutely. And they've of course got the Dacian mill 100 odd Ks away, so they do have a mill to rely on, but the mill at Gwalia obviously changed the economics quite a bit, doesn't it?
Well, if they did truck the ore to the Dacian mill, which was an easy option for them, I guess that extra 70 Ks, like the back of the envelope figure is you lose a gram of ore per 100 Ks of trucking. So
yeah, that's right.
That would come into the actual mine plan, that whether that would mean you would take some stopes and some not based on the viability of them, but it just means that they would be losing a bit off the back end.
Yep.
So, but it's and probably something that I dismissed last week is the fact that it wasn't an easy option. But I think it's not that hard of an option for them to truck it to Dacian if this whole, and we'll talk about this if the scenarios, but look, if this fell over for Genesis, they're not definitely, it's not a showstopper if they don't have the Leonora mill, that's for sure.
Yeah, that's right. So the other thing that stood out was the owner-operator model. They have, of course, flagged this. They put a couple paragraphs toward it in their half-yearly announcement, which came out in February of this
Genesis
year.
Mining Services, they're calling it.
Yeah, that's right. So they've ordered the open pit fleet. That's all coming out. It's a bit different to what Raleigh and the team did at Saracen, isn't it?
It looks it. I mean, the whole owner-operated model as a mine owner and also operating the mining services part of it is interesting. We've obviously seen that be part of the model of Northern Star. We're seeing Bill go for a similar thing with Develop. Bit of a sign of the times potentially on how to have maximum margin as a miner.
Exactly, to help keep those operating costs down, won't it?
And if you've got the capital up front to capitalise all the equipment, we've mentioned before, a lot lower all-in sustaining costs when you're actually operating, and they've got
100%. I think the number is 175 million pro forma cash that they'll have once and if this is all done and dusted. So that one other bit that stood out from the Genesis announcement was them advertising Saracen's total shareholder return. And I think we flagged this when we spoke about it a couple weeks ago. I don't think Silver Lake picked the right fight flagging their total shareholder return. And we did delve into how they sort of tweaked the dates to make it look as good as it could look for Silver Lake.
This is Genesis's rebuttal to that Silver Lake article. I think they've been waiting patiently for a reason to put out an announcement, and here it is.
They picked the fight with the wrong person there.
Here's the rebuttal. They've extended it and made it 8 years, and they've measured it up to the merger with Northern Star. I actually think it would be fairer to include the Northern Star return post transaction, but before Raoul left, and I'd include that and just look 5 years back. But everyone's going to cherry pick this number.
I kind of like the way they've gone about it because they're really emphasising the team that they've got now at Genesis is the one that got Saracen up until that point.
Yeah, I think
so I see why they've done
that team. I'm pretty sure that team, the majority of them stayed at Northern Star when Raoul was leading it as managing director. So yeah.
Yeah. Okay. Moving on to a narrative being distributed. So this is a story that's obviously been in the media. I guess not helped by us quite a bit over the past month or so, and we saw naturally everyone trying to do what they could to influence the story and sort of verbalize their side of the story to get everyone to see how they see things. So
should we announce it first to sort of let everyone know how this industry is going to work from here on in? So look, there's an AFR article that's been leaked, information goes out, but just letting everyone know we run the mining news these days. Like it comes through us. You got any info, you call us. Like we own the bloody news now. Okay?
We don't offer immediate articles to go out, Matty. There's a bit of a delay to our production, but we will unpack it.
Delay versus the actual quality, gentlemen. So you want to get in touch, matt@moneyofmine.com if you want to develop a good relationship to control your own narrative. So
we don't promise anyone the ability to control their narrative. We will
definitely give you a better chance of not contacting us. So.
No, but I'm pretty keen to talk about what I see as, certainly what looks a bit like a pretty deliberate attempt to control a narrative in relation to this transaction. On Friday afternoon, there was absolutely an email that was doing the rounds, and it was sent out from a broker. It was actually a dealer note, so it wasn't a research note authorised by the research team, but it was a dealer note, and that dealer note had baked within it some talking points that are relevant to the Genesis / St. Barbara side of the transaction. And
pretty much every talking point was on that side. Couldn't have been more skewed.
Absolutely. And I think, when you look at that dealer note and you sort of remove the emotional language from it, some of those points were good, some of them were pretty weak. But the really interesting thing to me in this dealer note was actually when you open the attachments, attached to this email were actually a couple of research notes. So these are actual research reports from a different broker. And you looked at them and you opened them up, and at the very top of the PDF's page was a watermark that said, these research notes have been downloaded from an employee of Genesis. So it all just looked a bit funny, right? That's one example. The other thing I think that we should talk about there is an AFR article that came out in Street Talk yesterday. And in the AFR article, it sort of mentioned, this prediction that St. Barbara's board were going to say no to Silver Lake. And baked in there were, I think, some more talking points as well. And when you look at when you look at this AFR article, I've got no insight to sort of how AFR gets hold of this article, right? But just whenever I read an AFR article, especially one on a deal, and especially one where it involves a leak because it says sources have said, I always ask myself the question, who is best served if this were leaked? And that's usually the line of questioning that I go to when I sort of hypothesize where the source of a leak might have come from.
Yeah, I mean the section is Street Talk, so all the articles there rely on the journalists having, connections throughout the industry. So I think going in with that sort of perspective is the right way to go about it.
Totally, and I'm not critical of leaking things. I think from a strategy perspective, it's actually super advantageous at times to
absolutely.
Now there's been more mail that's come in today. The word on the street, speaking, there's Money of Mine Street Talk, that Silver Lake have cancelled their RBC roadshow that they were going over east for. So, which if this deal isn't getting accepted, is there any point in going on a roadshow anyway? Until there's a new deal that's put in.
Well, I want to talk about that in the sort of perspective of what Silver Lake was actually trying to achieve with this whole thing. And we obviously spoke about this on the weekend and sort of did a bit of digging and just trying to understand what Silver Lake is trying to do with this bid for the Leonora assets. And we sort of put it in perspective with what they've done in the past. So you just sort of cast your mind back to 2021 when they acquired the debt in Heart Gold, and they, went about it in quite a disciplined approach. And then you sort of think about the merger between Doré and Silver Lake, and this happened. It began in late 2018, and Doré wasn't in a distressed situation to the extent that Heart was, but Silver Lake absolutely had the upper hand in that merger. But yeah, I think putting the perspective of how they have gone about their M&A, that track record of being, nimble, being opportunistic, it just didn't totally make a lot of sense to go and acquire the Leonora assets for near to $700 million, an asset that's been sort of, infamous for how it hasn't performed over the last few quarters and years. So what do you guys sort of think of that?
Why pay up for an underperforming asset that they don't have obvious synergies with, right?
Exactly. And we had sort of hypothesized, speaking about this when we first recorded a couple of weeks ago, that some sort of M&A down the track had to be in the works, whether that be, Red, I think we mentioned at the time. There was always that sort of lens that it didn't totally stack up on its own, did it?
Yeah, the angle for Silver Lake is the piece of the puzzle that hasn't sat it doesn't feel like I've had a resolution from that perspective for a long time. What is their real goal here? What is their angle here? The market seemingly doesn't like the idea of spending up for an underperforming asset, and it doesn't really fit their historic way that they go about M&A. They bid low. They look for distressed situations. They get a really good entry price. It doesn't fit, right? So. And I think where we came to when we started hypothesizing is we're starting to entertain the thought that what if their real goal was never actually to spend up on these assets?
Yeah. And that once you sort of look at it from that sort of perspective, you can really make the numbers and the facts around this, like you always can, sort of really support your argument. So coming into the equation, at the more or less 11th hour, there's no really realistic timeline before that they were going to be able to get there. They couldn't have come in any later and still had any reasonable chance of scooping this up. And then with the cash and the revised part of the bid, but not really changing an awful lot, you can really make those details support your argument, can't you?
I think you could hypothesize that Silver Lake's real angle here, they might have been looking to not pay the $700 odd million for Leonora, but perhaps their goal, we could speculate, could just be to nudge St Barbara, elongate this process, stretch it out a while, and in the process of stretching it out, who knows what the solvency of St Barbara could be in any interim period, and if that solvency element of St Barbara led to a down the track of administration, then that's a scenario where Silver Lake does thrive.
And I think we dismissed last week the fact that Ulysses needs Gwalia for this whole thing to work, but I think we've the fact that they can just truck the dirt to Mount Morgans, and this whole administration concept is that the fact that Genesis would end up just walking away, which would have tipped over their St Barbara deal because they would have the banks would have foreclosed.
Why would Genesis walk away?
Well, would they hang around and pay more for Leonora when they can just truck it to Mount Morgans?
Well, I think the point that we're sort of getting at would be that Silver Lake would be much better suited in a battle over that distressed asset, given the sort of size of their balance sheet at the moment.
Way better balance sheet.
No, they'd end up getting it a lot cheaper. if it went into
Well,
administration.
it would be,
just
it'd be
putting them
cheaper,
head
but
to head.
It'd be cheaper, and also they're better equipped. Like, if you're the administrator of the process, you're going to look a lot more favourably on a bid from a counterparty that has and like an amazing balance sheet and cash producing assets already.
It's a sort of auction of sorts, and if you're tossing up head to head Genesis in that position, given Silver Lake, I think that's the point we're making there.
And that's a scenario that probably fits Silver Lake's historic acquisition dynamics, or at least the way that we evaluate their previous two acquisitions. They're either semi-distressed or distressed situations, and it's also an outcome that would be horrendous for St Barbara's current shareholders if it ever got to that.
Absolutely, it'd be really awful. And I guess Silver Lake could come out with a revised proposal in the next couple of weeks and make us eat our words, but that was just something we were spitballing and hypothesising over the past couple of days.
But the only way they would have went into administration would be if Genesis either walked away or the process went on too long and the bank foreclosed their debt.
It's that 30th of June date, isn't it?
Totally. And I mean, Silver Lake's offer was subject to DD, and that was a point made pretty well by the St Barbara side. So like if Silver Lake wanted to annoy and elongate, they'd stretch out the DD. They say they've still got a few things to check. The financing thing could be held up. There are just conditions that could be stretched out over a long enough period of time to the point where their solvency could be in question, and I guess there is uncertainty around how Genesis sort of backfills anything that time. So you could make the argument that Silver Lake's real goal here was to annoy St Barbara and sort of stretch out their solvency over a period of time as well. That could be a strategic thing where they could be even more opportunistic and get a better price.
And I think that kind of flows to the next question. What does Silver Lake do now? So those performance rights are converting into shares. That's conditional on St Barbara shareholders approving the revised Genesis transaction. That's pre-June 30th, obviously.
So that's 60 million or 65 million bucks right in the bank straight up. So that's a big ticket item.
Yep, and you sort of flagged what you'd heard on the decline before, that the roadshow with RBC that was publicised also in the AFR article yesterday has been cancelled. So
means they're probably staying there. Obviously, that would mean they're either not partaking in the deal at all, or they are keeping on base to put a revised offer in.
I'm not sure you can have a good view on what that means.
What do you think it means? What is the hype?
Well, I talked through a couple other scenarios. So one thing that we spoke about before, would they just go and buy some stock? And I find this hard to believe. We've flagged already that they get exposure to the assets they don't want exposure to. They get a block of shares that they don't really want. They'd have to buy a sizable amount. Another thing could be potentially lobbying St Barbara shareholders. So they did flag in the initial proposal that they had L1 and Baker Steel on their side. That was sort of, conspicuously not in the revised offer. So
and to note that Baker Steel are Genesis shareholders, and Silver Lake have claimed in their announcement that they were siding with them, but it appears that hasn't gone down too well.
Yeah, I think you could sort of,
considering they're a Genesis shareholder.
Well, that's what the AFR is writing, right?
Yeah. So what's sort of driving the rationale behind Silver Lake going after these Leonora assets? Obviously, we touched on it a bit before there as well, but is there a sort of growth problem that a lot of mid-cap gold stocks have? They never want to get to that point where the assets are winding down and they're just returning capital to shareholders, because then they fall out of the indexes, and that has a lot of flow-on negative effects on the share price. So does it mean they look at other M&A options? Are there names out there that you guys would sort of put forward that could potentially be interested if it doesn't come to it that they get the Leonora assets?
Well, they want short-term ounces, it appears. Like Gwalia is the easiest way to get short-term ounces right now. They're obviously looking to fill a production void coming up with Mount Munga not winding down. I know Daisy Bolano's winding down, which was their flagship asset on the Mount Munga side. So
I think even before we talk about the M&A options for them, I think we should put a line through, there are other options in this deal, right? Like what could they do in this deal now? They've either got to increase value and substantially, and also simultaneously like reduce conditionality. So
and probably significant and reduce or increase the cash component, because you look at how much their headline value's gone down due to the script component. They'd have to nearly whether decrease the script or put a lot more upfront cash in.
Yeah. And even like offering a substantially higher value amount, if you do that too close to completion, then it's pretty hard to still get over the line. So how do you increase the value piece? Script and cash is the way to do it. Do they do that? It's pretty risky, and we speculate that they don't even really, or they might not even really want to pay up for them. So it just feels like this move is sort of Genesis going check on the chessboard. And it doesn't look like there are too many rational options yet. But by all accounts, to us, it sounds like you never know, right?
We're playing that scenario out in my head, and you're thinking, what would St. Barbara sort of come back with? They don't want that conditionality. They were already critical of the Taurus aspect of the debt. And the fact that what we've heard is that they've cancelled the roadshow, so they wouldn't be doing a placement and being able to just put the cash up front straight away makes it seem unlikely, but it's just a guess at this point.
And then definitely the St. Barbara, buying St. Barbara shares, like hypothetically, say if they got to 20%, they still only need 50% of St. Barbara shareholders to approve it. Does that...
And that they wouldn't get to 20% holding. The stock is not liquid enough to do that in a short enough period of time.
Well, even if they got to 10, they could still get outvoted on the Genesis deal anyway, and they'd be left with 10% of St. Barbara. So
yeah, that's it.
Yeah. Okay. What's
and then coming back to your point, like on do they need to do M&A to fill a growth gap? Then what are their options, right?
Well, the first one that comes to mind based on as they quoted in their announcements, their underground mining expertise. The only one that springs to mind first up is Pantoro. So I know there's open pits there at the moment, but there is that underground component. There is, and that sort of fits that distressed assets that you've spoken of.
They are in the process of a merger themselves.
Yeah, but like in terms of the highlight, it seems that they want ounces right now. So looking at
they wouldn't be looking at development, would they?
No. Like say, let's pick one like Gascoyne, for instance. Like yes, they've got a mill, they've got a potential mine, but it's still being drilled out. Doesn't have a mine plan. Like it's a great asset, but
tricky pathway to control with Tembo on the board and also owning 20%.
And it won't. And it might be. It's a long time before they're going to get the dirt out of there. So any other ones come to mind for you boys? Short term,
Red 5, another like semi distressed opportunity potentially. Or if I know it's probably not. Like Silver Lake don't have a history of buying the undeveloped project and developing it necessarily, but there's Osgold stands out as an option, but
they're open pits.
Yeah, exactly.
Yeah, I can't say it looks like they want to. Well, they're going for Gwalia, which it's one of the most difficult mines or you could nearly say the most difficult mine to make money out of that is operating in Australia at the moment, and they're going for that. So they obviously want an underground mine to feed their ounces. So. No, Pantoro's the only one that comes to mind for me, unless they want to pay overs for something else. So, yeah, plenty more to pay out. What's the next piece of news coming out, boys? Revised deal from Silver Lake. That's the only thing we can wait for.
The Balls family in their court, right? I'm a bit dubious that they've got a card up their sleeve still. But you ask around the town, and everyone sort of says that that Silver Lake aren't sort of the sort of company that just give up on things when they've got a view on something. They really go for it. So who knows, mate?
JD?
I think if you were going to pick who's going to end up with Gwalia in a couple of months' time, you'd probably be siding with Genesis now, wouldn't you?
Yeah, exactly. And as I said, the sequences of events from yesterday, today, I guess the patience of the Genesis quarter and RAL to rip this out now. Full compliments from me, I can tell you that much. I reckon it's been a bit of a masterclass.
Well, it probably should have been that. Like, how many times are we recutting the deal, right? It maybe should have been the recut before instead of tying the contingent payment in the first place?
Well, I guess the one before was just a bit cheaper. They've played it on long enough, and they're probably getting the best value they can now, considering all the circumstances. So,
the information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation, or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation, and needs.